Hello everyone, today is Wednesday, January 29th. It's about 8:38 p.m. Eastern Time, and I have another live trading video from Trader Jim. Just want to refer to today's chart and look at the action today. You can see on this 5-minute chart a sharp sell-off at the open and then a rebound here. And what everybody wants to know is, how does Trader Jim pick his levels, and, how do you see the support and resistance on the auto trader? Well, over and over again, I point to the high volume nodes, and today was a textbook example. In the overnight session, the point of control, or the high volume node here, was exactly 9138, and this 9138 zone, because we'll say 9138 to 42 essentially, or 9136 to 42, this area, if we look right here, this big bar here, so this is the third 5-minute or fourth 5-minute bar of the session. This is where everybody saw that the market was going to tank. And from a chart perspective, you can easily see the break of this line right here. This is a divider between what was resistance and then briefly support, and then once this level was broke, which to be more precise would be right here, the price being 91.37 was really the breaking point, and this big bar down tells us that everybody saw the short and the break of this high volume node. And then the question becomes, in a sell-off of this magnitude, where is the market going to stop? Well, here we have a high volume node in the night session at 90.97.75, and then another one from the day session. The point of control from the day session was 2 days ago, 91.08, and then this high volume node here at 90.89 just went a little bit below that. But more importantly, this is why you need to look at a chart of just the day session and to see the gaps in the market. And so this chart with the fib grid on it is the regular session only, which is RTH, regular trading hours. So here's your session template to just show the day trading, the day session. And what we have is we had a gap from yesterday, and so obviously they came down to fill this and then some. And where did it go? Well, it went to the weekly on the daily session only, the day session only. It went to the weekly 100% range. So the range of the NASDAQ on a weekly basis, this is where it stopped. And more interestingly, if we look at the bigger picture, there's another gap here that was technically filled. This is called a it was filled price, but not the spatial gap here. This is a spatial gap, and I'm going to go out on a limb and say that the market wants to come down and eventually fill this area, and that might be what it's trying to do here. But I suspect at some point in time, this area here, 89.67 to 89.80 or so, this zone will probably get filled eventually. But it's a good idea to look at these kind of charts. There was a huge gap here, and another interesting observation is this huge gap down, which was from Sunday, that the market drove higher and eventually filled this gap in today's session. Actually, it completed the gap, kind of like here, but it gapped up, but then they sold into that. So interesting technical pattern developing, but once again, drawing your lines of support and resistance is just a matter of seeing where price had resistance and then it found support, and not that hard to do. Okay, let's have a look at today's video from Trader Jim.
9 o'clock. Yesterday's video, I said trading above 9,060 would bring about 91.35. We reached that, went a bit beyond that, and now retracing. For me, from this point on, hourly closes above 91.22 remain bullish. That's why I clicked Auto Trader on longs. Auto Trader recognizes a long pattern and takes a long. Expecting 91.65 as a minimum, possibly 91.90, a level mentioned yesterday. That trading above 91.35 indicates possibility to 91.90. So looking for that, definitely not taking any shorts right now. When will I start taking shorts? Hourly closes below 91.22. Remember, not just a breach of 91.22, but actually hourly closes below 91.22 would start getting me bearish. At this point, longs only. With less than half hour before market open, Superenko 6. Hoping to complete the trade before market open.
Thank you. You could drive a truck through that range.
Here they come. Let's see if we can hit that first target. I would love for this to happen before pit session open. Just a few minutes away now.
We see a lot to like, and we had a whole series of analysts once again chasing their tails and raising the price.
Here we go. Perfect. Okay. Now I'm going to set the stop at break even because, as you know, anything can happen at the open.
But Barry, it's been quite clear.
8 minutes away.
They're trying to change
Perfect.
the valuation of certain companies, turn up the multiple, sky high.
All right, we're about 2 minutes now before the pit open. I really want to be flat. I am closing this position. I want to be flat. Now I'm going to just wait because anything can happen at the open. And of course, today is FOMC 2 o'clock Eastern. So that's something to keep in mind. This, of course, is short of the daily target of 500, but that's okay. Plenty of time today. Not going anywhere, so I am not concerned about time. Let's things open up and see where we are. Very surprising move down. I did not expect that. I did not use the open range filter because I was afraid of a test of 22. 22 was essential. I think I mentioned it before. 91.22 should have held. It did not. So I had the longs actually turned on all the way here, but there was no qualified long trade. The other trader did not take a long and really saved me from a losing trade, as I thought that 91.22 would hold. So now trading below 91.35 and below 91.22. This 91 even might be just a psychological kind of support, but the real number is now 9,060. So I'm just going to stand aside and just see what they're going to do. Still,
perhaps we may see more.
I don't know. I wanted to say I'm still bullish, but the fact is they close hourly below 91.22. I just cannot be bullish temporarily. They need to prove to me now that indeed they are strong, and this does mean I'm going to miss out the beginning of a move higher if there is a move higher. As they say, information does cost you money. That's okay with me because I much rather make less with more certainty than try and make more on a less probability kind of setup. So I'm just going to stand on the sideline here and see. As you can see, nothing is clicked. The other trader prevented any kind of a long trade all the way down here. Once we broke 22, that's when I disabled everything.
A certain amount of it, and I think you tried to make this point, is psychological. If you think it's QE and it's going to cause you to buy, then you're going to buy. And it doesn't really matter whether there's excess liquidity or not. And you can attribute it to the Fed. So if the Fed stops and you stop buying, then there is a market impact.
It's very possible they just firm up here and go higher, but at this point, I just don't exactly understand what they're doing. And I said it before, if I don't understand, I don't trade. This move lower was not part of my, I guess, higher probability occurrence. I expected them to go higher to 91.65 and then 91.90. But all that was based on the idea of closing hourly above 91.22.
Facebook too, in a mix with
and
in the next 24, 48 hours. Outside of that, in a bond market, yield.
It was 10 o'clock, and we are definitely below 22, so it could be 9,060, but I'm just a bit hesitant about taking shorts as well. Definitely shorts was the way to go. If I had the shorts turned on, both on an open range filter, and this one would have been a beautiful day already. I was not counting on shorts, and I did not want to take shorts when we were above 91.35. So those are the breaks. Now we're just gonna stand on the side and wait. Boy, they just continue to hammer them down, heading toward that 9,060 zone. Completely unexpected. The auto trader did an excellent job of keeping me out of long trades. Here is a perfect example where I call the direction completely wrong, and yet the auto trader comes in and keeps me out of losing trades. To avoid losing trades is just as important as getting those. I think more important, actually, is getting the winning trades. Look at them hammering them. High volatility. Doing nothing for now. Might not do anything now until after the FOMC. Unless I'm seeing 9,060 and then firming up on 9,060. Remember, when I talk prices, it's always a zone. So it's an area, it's not exactly to the tick. So back to what I was saying, I think avoiding losing trades is more important than participating in winning trades, because if you think about it, no one ever got disqualified from a funded account by not having enough winning trades. People got disqualified by having too many losing trades. So if you have a tool that will help you look at that, wow, avoid losing trades, you are so much ahead of the game. I'm not going to do anything until they touch 9,060. Well, waiting for the FOMC announcement, a little less than 6 minutes away. And I'll tell you, they fooled me every which way today. So first, trading above 91.35. First thing in the morning, I expected to move higher, and they sold them off. Luckily, the other trader kept me from taking long trades. And then I expected them to reach 9,060. They stopped at 73, so for me it's not close enough. 73 does not satisfy the 60, so I could not take any longs, and here we are again, back at 91.35, and had an hourly close above 91.22. So I missed the move lower, then I missed the move higher. They just, they really fooled me today, which is okay. No, that happens. I guess I'm a bit upset with myself because in my trading plan, and I can read to you my trading plan for today. I always write out my trading plan. So it says trading above 91.35 and or hourly closes above 91.22. Trade longs only toward the move to 91.65 and 91.90. Breaking 91.35 and or having hourly closes below 91.22, look for a move lower toward 9,060. So, I mean, I did fine as far as disengaging the average trader on the long side and just doing nothing, but the reality is I should have taken short trades once we closed hourly below 91.22. And I was too hesitant. I did not do that. I mean, definitely trading, taking shorts below the 22 would have easily hit my daily target because the low was 73, like 50 points lower almost. So yeah, I would definitely have hit my daily target on a Super Renko 6 chart, but I hesitated, because in my head, my mindset was so fixed on longs that when I saw the sell-off, it really took me by surprise. So I kind of froze, and I did not allow the other trader to take shorts. I assure you, if the other trader was allowed to take shorts, it would have been an amazing day, that amazing slide down. Even if I got in a bit late, let's say by the time the other trader confirmed, so maybe let's say 91.15, it's still like 40 points lower to 9,073. But as it stood, I just kind of looked at the screen and I knew what my plan was, and I was too hesitant and I couldn't go through with it on the short side, and that's on me, right? So again, an example of, can I blame the auto trader? No, the auto trader was itching for a short trade, and I just did not allow it to take shorts. Well, that's okay. That's behind me now. Now we're looking to the announcement, and of course I have to wait 1 minute, 1 full minute before engaging the auto trader. There they go. So we're right smack in the middle of that 91.35. Trading above it, 91.65 should not be a problem, up to 91.90. But below it, and we can head down to 9,060 again. So, right? Gonna wait till 2 o'clock and 1 minute. Those are the rules. They will disqualify you for that if you try to trade the FOMC announcement. Both one-up trader and top step. Really trying to make up their minds here. Okay. So what do I think? Let's see if they can go higher. As long as they hold the 35. So I'm clicked on longs, and now the other trader has to confirm a long trade. Well, overall, not much of a reaction though, right? It's really not much of a reaction at all. I will disengage the longs if we start trading below 22. Above 22, above 35 is bullish. Well, here's the long. Now let's see. Let's see if they can hold it and move higher. I don't even know what the announcement said. I assume there was no change to interest rates because of the really not much of a reaction here. So I assume it was whatever was expected, and I think no change was expected. Then from here and take it all the way to 65 and then to 90. Here we go, target 1. stop at break even here in case this is just a spike to fool everyone, but I don't know. I just said, oh, that's what I expected in the morning, which did not happen. Yeah. Come on. Here we go with positive slippage. So they fooled me earlier, but did not fool me now. So I kind of get to redeem myself a little bit. Here's the template, $500 target. What now? Do I dare trade another account? It's just been a tough day. Maybe I just shouldn't. Not sure. Let me load up another account just in case there is another opportunity. But I'm very happy that at least I was able to stick with it, and I did not play today perfectly. I've made mistakes today. That's okay. At least now, toward the end of the day, I managed to salvage at least some of it.